Yeah, the whole goal is to build wealth as fast as possible. And the best way we see to do that is send the least amount of money to the IRS. And then now we can, not that people want to stop running their business. They actually enjoy running their business. But if I've got the freedom to walk out one day, throw the keys on the roof and never come back in because I've built enough wealth outside of the business, that lets me run the business in a different way versus like I have to make this thing work and sell it at some point to, realize my financial freedom goals.
This is Get Unstuck Podcast, a podcast for entrepreneurs who prioritize their life first, business second. I'm Mutita Panmuk, your host, who dedicates my life to designing and building a business that supports lifestyle. We will learn together from entrepreneurs around the world how they overcome their life challenges, their business obstacles, and yet still get unstuck from the hamster wheel of burying themselves into their business. Because time is the number one commodity in the world that you cannot get back once it's gone. So let's shorten the learning curve and see how can we prioritize better. Let's get unstuck. 1. Hi, Get Unstuck Nation. Have you ever heard the saying that 2 things that you can't avoid in life is death and paying taxes? So maybe our guest today can help you change those thoughts a little bit. So Patrick Lonergan is founder of Vital Wealth and host of Vital Strategy podcast. Patrick specializes in wealth building and tax strategy for high-level entrepreneurs, and he has a proven track record of building multiple successful businesses from the ground up. So, we're going to clear things up about finance that we don't like to talk about, but we cannot deny talking about it. And also, it's something that is the reason that I believe it. This is a true freedom. Like, when we don't have a financial freedom, like it's always drain our energy, and it's actually the things that why you build this business, isn't it? Because you don't want to think about money. You just want to be able to use it without thinking. So without further ado, our guest today is amazing. So please welcome Patrick to our Get Unstuck podcast today. Hi, Patrick. How are you doing?
I'm well, Mutita. Thank you so much for having me. I'm excited to be here and talk about all things finance and tax. So this is going to be an exciting conversation.
Yeah, I know, right? Before we get there, I'm curious, how did you start your entrepreneurial journey though?
Yeah, thank you. I think I always had an entrepreneurial bent. And one of the things that happened to me was I read a book called Rich Dad, Poor Dad about 20 years ago, and I was headed to law school. I had a full scholarship to law school, and I was late for my first class buying a piece of real estate, and first class on the first day. And it was downhill from there. And so I dropped out of law school, pursued real estate, and then one thing led to another, recruited my wife into that business. It's still running today. And during the downturn of 2008 on the real estate side, I made the shift because it was my job to go raise money and find the deals. Well, there wasn't many people that wanted to put money into real estate projects, and there was not many deals to be had. So I started looking at the financial advisory side, and I had financial advisors that would come talk to me as a business owner, and they were missing the things that I thought were most important. They were trying to give me a better investment. I had that in my business, and they were also wanting to take all of my free cash and put it into the stock market or something along those lines. And what I really needed was I had more ideas than I had time and money to execute on all those things. So I needed somebody to actually help me protect my cash. Make sure I wasn't spending it down to zero, because the number one reason businesses go out of business is they run out of cash. And so we started looking at how do we show up and serve the entrepreneur to manage their finances well, pay less tax. That was really the big thing. We had a period of time where during that downturn, banks were coming to us saying, hey, we need more dollars to sort of keep these loans going for you. So we were putting a bunch of money into these properties. The problem with paying down debt is it's not tax deductible. So we were trying to make a bunch of money so we could pay down the debt. Then we ended up with a tax bill. And I was like, okay, we're going to figure out how to never be in this situation again. And let's help as many people as possible to drive the tax bill as low as possible. So that's the story of how we started as an entrepreneur and migrated over to solving tax problems for entrepreneurs.
So, do we have to plan this since we decided on business model, or what is it that we should really start it on then?
Yeah. So I think business is just hard in general. And from my point of view, if whatever you have an excitement about from a business perspective, whether that's, being a baker or creating a service where you're coaching and adding value to people's businesses, I think if you can get started and then figure out a way to bring value to the marketplace, I think that's the business model you should start with. And then you need to quickly figure out how to make that profitable. It's the statistics just show us how hard business is to run. 9 out of 10 businesses fail in the first 5 years, and those that make it past that, again, a large percentage of those fail. And so, just being able to persevere and find the thing that you're excited about, and just run that business efficiently. I love the work you do, because I think when we think about operations of a business, it's so easy to get caught up in I'm a really good technician. I'm really good at doing this thing, but I have to run the business well to make sure that it's going to be profitable over the long term.
Talking about that, many entrepreneurs focus on making sales, and then sales leads to revenue, right? But they may be like not pay attention to, okay, these are expenses, fixed expenses, or what do you call it? Adjustable expenses or something. Yeah. This one is deductible on taxes or something. So how can we plan this ahead? Or someone, I have met many of them, also maybe hesitate to pay on the stuff that they supposed to pay in order to scale, because they're overthinking on tax. What would you suggest on this mindset?
Yeah, no, I love it. So I think about $1 of profit and how hard that is to generate, right? Like, I've got the revenue that comes in, and then my expenses, and then profit falls to the bottom line. And one of the things that we talk through is we have 4 levels of tax planning that we work with on our entrepreneurs. And my favorite is what we'll call level 1 tax planning. And level 1 is the IRS gives us guidance, but it doesn't take any investment. Okay, so I'm moving money from it's just good bookkeeping and administration. And sometimes I'm moving money from my right pocket to my left pocket, and it gives me a tax deduction. And so we've got a whole long list of the opportunities that are available there. And so if I can save somebody, we found some level 1 strategies where we saved somebody $100,000 in income tax. Okay. If I don't have to give that money to the IRS, and that just flows to the bottom line, and I can spend it on, I can either reinvest it in my business, I can put it into other wealth building activities. Like, that's all really exciting to me. And so, I think that's the number one place we always start with entrepreneurs is like, let's go find all the level 1 opportunities that don't really cost you any money. It's just good administration and bookkeeping. And now those dollars are falling to the bottom line, because so many times entrepreneurs, like we had an example where a client was making very healthy money. They went and bought a building, and that worked out nicely. They paid cash for that building, except when you buy a building like that, that's not a tax deductible expense. And so now the IRS, there's still a tax bill that's due with my profit. And so they're like, oh my gosh, I'm out of money, but I don't have the cash to pay the tax bill. And so another piece that we think goes really well with, and we actually start with this, is let's manage and understand your cash flow really well, and make sure we have a minimum amount of liquidity. Cash on hand is a fancy term for liquidity. Let's just make sure we have those dollars set aside to pay for those taxes that are coming up. Let's make sure that that's something that's built out in our cash flow planning. So we think those 2 pieces are awfully important. And then if there's more desire to drive the tax bill down, we can get into level 2 and level 3 planning as well.
So but most of them that they all these days, because we have software, we have AI that helping us doing bookkeeping. People use them often more, right? Or
Yeah.
they're still doing manually right now from your experience?
Yeah.
It's
I
like,
think
I don't know.
Yeah, this is a great question. We have seen some people come to us that their finances are a mess. Because a lot of times our clients are using QuickBooks Online. We think that's a great tool, but they're either not. They don't have somebody. We think a bookkeeper is one of the best expenses you can pay to have really good financial data. It's like when I go to the doctor and he tells me my blood pressure and all of my vital statistics. Is we think that's the same thing with your finances when it comes to your business, right? Like if I can look at my finances, see accurate data, it allows me to make good decisions moving forward. And I think AI helps with some of that, but at the end of the day, I have to go in and go, oh, I need to categorize these expenses. I need to make sure that my profit and loss statement is designed and organized in a way that is simple, but gives me really good feedback. So I know what things are going to be, where I need to go pull some levers to make my business more efficient and effective. So I think good books are a key piece to that. And then unfortunately, AI is not, we leverage AI all the time, but we haven't figured out how to get AI to synthesize that data that we have and give us good outcomes like, a great example is what we call the qualified business income deduction, the QBI deduction. If I'm a solopreneur, okay, the way I calculate that, just simply, it's more complex than this, is it's 50% of my wages or 20% of my net income, the lower of those two numbers. Well, if I'm the only employee in the business and I outsource everything else, I can start to pay myself a higher wage and bring my net income down. And that's where I can create $100,000 of additional deduction just by getting that number correct. If I have enough income running through my business. So AI is a fantastic tool, but sometimes it takes a professional to look at your information and go, okay, hey, here's some real opportunities to adjust these things. And just one more point, like CPAs are really good. We're not CPAs. But the thing that the CPA does is their job is to get the right numbers in the right boxes at the end of the year. They're typically not, their business model isn't tax strategy, even though they'll often tell you it's tax strategy. We're meeting with our clients in July because we know what the numbers are going to look like through the rest of the year. And we're helping create a tax strategy that they can execute on before December 31st. And most CPAs aren't talking to you until the beginning of the year, trying to collect all your data to file the tax return. From our point of view, that's too late in the game. They should have been in touch with you earlier in the previous year. So
I'm about to ask you, when should they contact you? Because right now when we are talking is January, everyone. Like we are recording this because this is the beginning of the tax season right now.
Yeah.
And so you started to talking to your clients for the current tax season to file next year in July. So like 6 months, 9 months before.
Yeah, exactly. Because so many things have a December 31st deadline. There's a few things that can trickle into the following year that I can go back and the previous year get some deduction for. But really, from our point of view, the earlier the better. One of the things that takes us a little while is to gather all of the information from a client. We need to know everything from your legal structures to insurance, investment accounts, to really understand the full tax picture. If I have a clear picture of the map that we're working from, it's easy to get the directions to the next place, right? But if that map's fuzzy, if you call me in October and I only have a couple months to understand your situation, understand your goals, design a tax strategy, and implement it, it's really hard to get that done really, really well. So we think the more time, the better. And our client engagements generally run year after year because they're like, wow, okay, our average tax savings for our client is $280,000. So if they pay us $60,000 or $70,000 and we save them $280,000, they're like, this is the best money I spent all year. And then then I need help moving forward every year because my business is constantly changing. I have new opportunities. I need help executing on these things. The one thing we point out to our clients, and they feel, is as your complexity or as your wealth grows, your complexity grows. It's really simple if I have $5 to my name and no business, right? The thing I need to do is just go earn some more money. I don't need to worry about trust structures and tax liability and all these other fancy things. But when I have a few $1,000,000, flowing to the bottom line, I have all sorts of things going on that I need. I now have a second job just trying to manage all that. So we show up and help our clients just manage that second job in a way that they can go focus on the thing that's most important to them. It could be their business, could be their family, like just go do something better, right? Than worry about your finances. There's the whole goal is to not be busy, right? It's to work hard so we can live an optimized life, spend time with the people we care about and do amazing things. So
Absolutely. Because I also noticed that I know that you have the holistic approach towards finance as well. How is different from the traditional financial advisor that they are doing, and how it's different from yours?
Yeah. No, that's a great question. Thank you. So, we actually start with the end in mind. We think the most valuable things in life are this acronym called REACH. R's for relationships, E's for experiences, A's for advancement and growth, C's for contribution. The scriptures tell us it's better to give than receive. And then H is our health. And that's got three components. My physical health, right? Like you can't give me cancer for any amount of money. My emotional health, if I'm depressed and can't get out of bed, again, that's no good. And then we think there's a spiritual health component of that as well. So if I know what's important to a client on those things, we can design a financial plan to help them get there. And really that financial plan consists of what we call the four cornerstones. So we've touched on two of them. We start with cash flow. If I understand your cash flow, then I can start to build a tax strategy. Once we just figure out how much money I don't have to send to the IRS, now I can invest those dollars, right? So now I can work on building assets to get me closer to financial freedom. And then the last piece is protection. I don't want to build all this wealth and then have, a lawsuit come, unwind it all. So we think insurance and legal structures are a key piece of that whole thing. And so as people's wealth grows, they move through different levels of each of those. And we just help take our clients on a journey to make sure that all of their categories and each of those categories are buttoned up with their current level of complexity.
That's why you need someone to be like your right hand in case things change in your business and your personal life, isn't it? Because it would be change every time that more money is coming in.
Absolutely. And we look at every year, we're looking at, the things that are changing are the business is almost certainly changing. The tax code may be changing. Your family or partnership structure might be changing. And so it's like, we need to keep on top of all of those things and make sure that your planning is constantly up to date. I wish I could just hand a client a plan and say, hey, here you go. You're done. You don't have to worry about this ever again. But that's unfortunately not the case. So that's great.
So, okay, let's talk about the tax burden that most business owner overlook. What would be the common thread that you have found?
Yeah. I think the one that's most overlooked are probably those level one tax strategies that I was talking about. And I'll just give you a few examples that we think are low-hanging fruit that we should absolutely take advantage of. Okay. So the first one is the home office deduction, right? Like there's no problem taking the home office deduction. The IRS actually says we will give you a $1,500 deduction almost as the standard deduction. Or you can itemize all of those expenses. And so we have a spreadsheet we help our clients fill out. And sometimes that deduction gets up to $4,000, $5,000. And it's like, $5,000 deduction is better than 1,500, and it took us maybe an hour to put that together and could possibly save us $2,000 or $3,000. I don't know about you, but I like making $2,000 an hour. I think that sounds like a very healthy wage if I can do that. So we think that's a really good use of time. Another good example is if I have business meetings at my house, if I'm having vendors over, if I'm having employee annual meetings, if I'm having business partners, advisors, any of those things taking place at my house, there's a rule that says I can rent my house out for 14 days personally, and I don't have to claim it as income. Now, I don't want to go put it on Airbnb and have some strangers in my house. But if I were going to have an annual meeting and go rent the house, the next block over to do that, why not just do it in my property? So it's an expense to me on the business side, but it's not income to me on the personal side. So I'm moving money from my right pocket to my left pocket. And so we go on websites like Airbnb or PeerSpace or VRBO and just find comparable properties. Like, what would my house rent for a day? And then we do that for 14 days. And it, again, can create a $30,000 deduction if we're doing it right. And that could save us $10,000 of income tax. So like those are very simple things that people can do. And we help walk through all of that. We make sure the lease is in place. We make sure the values are correct. So if, the tax authority ever shows up and says, hey, we want to see how you came up with this value, we say, here's all the information. And so to make a deduction legitimate, it has to have two pieces. It has to be necessary for the business, and it needs to be ordinary, meaning that I can't pay myself 4 times more than the market, right? For that expense, it has to be an ordinary expense. So if it meets those 2 thresholds, then the IRS is like, okay, congratulations, you did everything correctly. So we just make sure that we're, it's a fancy term, substantiating that deduction for the client to make sure that if the IRS ever did come look at it, they've got all of the documentation there that they would need to say this is a legitimate expense. So we think some of those, like we just walked through a couple examples that could save somebody $12,000 in income tax, and we just think that those dollars are better used in the entrepreneur's hands to continue to build their business and grow wealth versus giving it to the government bureaucracy to, I'll say mismanage those dollars. So.
No wonder, on average, you help your clients save $280,000 a year.
Mm-hmm.
Wow.
Yeah, and now not every client's in that category. We have some clients that are making, $10 million a year, and we can save them $1 million or $2 million, right? If we have a client making $1 million a year, we might be able to get that. Here's just a real quick overview of how the dollars break down for somebody. If I'm making $1 million a year, okay, it usually falls into these 3 buckets. I spend about 1/3 on my lifestyle. I save about 1/3, and I pay about 1/3 in taxes. So 1/3 of $1 million is $333,000. I would love to say we can take $333,000 and reduce that by 280, and somebody only pays, $50,000 in tax. That's hard to do. That's really hard to do. Generally, we're going to pay tax on the money we're spending on our lifestyle. So we might be able to get $100,000 or $50,000 or $60,000, lopped off that $330,000, and all of those dollars just then go into the wealth building bucket. And so instead of paying $333,000 to the IRS, maybe we're only paying $200,000, and then $130,000 gets to compound on the wealth building side. And it's just incredible to see what happens to how fast clients can get to financial freedom when they're sending $100,000 to their own pockets versus the IRS. It makes a fantastic impact on how quickly they can get across that financial freedom line.
So that's the game that you're playing.
Absolutely. Yeah. The whole goal is to build wealth as fast as possible. And the best way we see to do that is send the least amount of money to the IRS. And then now we can not that people want to stop running their business. They actually enjoy running their business. But if I've got the freedom to walk out one day, throw the keys on the roof, and never come back in because I've built enough wealth outside of the business, that lets me run the business in a different way versus like I have to make this thing work and sell it at some point to, realize my financial freedom goals. So not that we're not going to try to run a very profitable, successful business and maximize the value and sell it someday, but it just takes all the stress off having to do that if we've built enough wealth to be financially free. Like we've had these conversations with clients and they've put in all the blood, sweat, and tears, and they're literally crying, I can't believe that we're at this point where we don't need to, if we wanted to, we could run our business differently. We could hire somebody in the business to run it for us, and we could just be in an oversight position versus like in the day-to-day grind. So it's pretty incredible to see how people's wealth growing can give them just a peace of mind around the life that they're going to live.
I really believe that the true freedom is financial freedom somehow, because you cannot deny that money is important, even though you want to make impact in the world, but it supports you in everywhere.
Absolutely. And if we just take to some of the extremes, right? If I'm broke, if I have no money and I can't meet my basic needs, it's going to be really hard for me to have an impact. Really, really hard, right? Because my sole focus is like putting some food on the table, clothes on my back, roof over my head. That is my sole focus. And so it's like, I absolutely agree with the statement that the love of money is the root of all evil. Okay. But we're not loving money, right? We're just using money as a tool. It's not good or bad, but that tool can allow us a ton of freedom. If we grow it, develop it to have impact. When I talked about that REACH concept, that acronym, we think those things are more valuable than money, right? Like I would rather live a full life in that capacity, have impact, have relationships, be healthy, live a vibrant life, and die with $0. Like I spend it down to zero, on my last day, last dollar, I go out, versus have $100 million and nobody likes me. I don't do anything. I didn't make any impact in the world. Like that is not the goal. The goal is to live an optimized life. And that comes through this concept of reach and taking these dollars, right? And applying them to these amazing things we want to do. So you have to have financial margin to be able to do those things.
What about those who like still running a business, taking action inside a business and want to shift to owning multiple businesses or to an investor mode, like planning to get there? Because that is another level. I think you're touching that, because that would give them more freedom, of course, to fulfill their life.
Absolutely. And I think there's one thing to be careful of. I have multiple businesses. Our clients often have multiple businesses. I think one of the things that makes a lot of sense is having focus. If our focus, like our businesses are we've got a real estate business. My wife runs that. I'm not that involved in that business anymore. And then we have 4 businesses around financial advisory. Okay. And so they're all in the same niche. But if I were to go open a cleaning company, okay, the thing that I found, because there was a point in time where I was both in the real estate game and the financial advisory world, tax strategy world. And I was doing a poor job at both businesses because I couldn't give my focus. And so it actually cost me money, wealth building, because my focus wasn't there. So I'm 100% agreeing with you on multiple businesses. I think we can just look at what is our core business, and then how do we add new ways to bring value to the marketplace that are closely aligned to that, so I can sort of add it into my current operational structure and not be distracted by a new shiny thing over here, and then I don't take as good care of my my current business that is actually generating a lot of wealth. So that's my only thought there, because we see it sometimes with our clients that get distracted by new shiny things, and then they come back a year later and it's like, why isn't my main operating company operating as well? Well, because you've taken your eye off the ball, and things have fallen apart a little bit. But yeah, I think that's a key point. Focus. The more we can focus, the more likely we're going to have success. And so don't want to screw that up by having lots of random businesses and lots of different places that are going to take that focus away.
Thank you for your 2 cents. Yeah, because right now portfolio owning is really popular.
Yeah, it is. Yeah, and I think there's a book I read recently by Cody Sanchez called Main Street Millionaire, and I think that book is amazing. I think she does a great job. I think it's just looking. I see how hard it is to make $1 million net income. Okay, and the people that come to us that are doing that are not sitting on 6 different businesses in 6 different categories. They might have 6 different businesses, but one's a real estate business that they operate the main operating business out of. And then they have some subsidiaries off of that business that do different things, might serve a different clientele, but are very similar. Like we've got one client that's a destination management company. So they'll put on huge events for companies like Toyota. Well, there's destination management. Then there's events management, which is different. And I couldn't tell you the difference. And then they've got a leasing company that will lease, equipment to, their events and destination management company. It's like all of that is just fits together really, really nicely. And then they need to own real estate that houses some of these different things. And so like all of that works together beautifully. It's when we, get outside that it can be problematic to be distracted by things.
Oh, okay. Okay. Everyone reconsider that. Okay. I got the 2 cents now. Okay.
Mm-hmm.
Any dream, just stop there.
And I'm not saying it can't be done. I'm just sharing our experience and what we see successful entrepreneurs doing. And I think it just goes back to business is so hard. And so to run one successful business is hard. To try to run 2 or 3 or 4 or 5 or 6 is just really challenging. Now, there's people out there that are probably really good at hiring good operators. And then they are so good at looking at the financials, seeing anything that is getting off track and sort of getting back involved to get their operator to run the business well. I'm sure those people are out there. It's just not me, and it's not a lot of the clients that we're working with. But if people do crack that code, I would love to. I'd love to talk to them more, just to hear how they're doing it and making an impact. Yeah, it's.
I think their brain runs differently. Like they operate different ways.
Yeah. Absolutely.
Yeah, totally. I agree with you. I really want to, if I get a chance, I want to have a meal with them. I really want to know how they see things. Like, it's going to be amazing, like how they think.
Yeah, for sure.
And to find an operator is already hard.
It is. Yeah, absolutely. Because you want somebody to treat it like their own. The problem is it's not their own, right? As the business owner, you're the last one to get paid. And if anything needs to be done, you show up and get it done. And until somebody has that ownership mentality, if they're collecting a paycheck, it's really hard to get them to think that way. Just run a little test. Don't pay them 1 month. They won't show up, I promise. If you're like, hey, we're out of money. Sorry, I wanted you to treat this business like an owner. I'm not going to pay you this month. They'll be like, hey, this is a lot of fun, but I'm going to go take my skills down the street to somebody that's going to pay me. So it's really, really hard. So finding great operators is, I think, a skill, and then being able to train and develop those people is also something that's critical, that I think is hard and undervalued. So
I know. Is something that I deal with every single day. So I know that pain very well.
yes.
So if like if you have a piece of advice for entrepreneurs who want to not only build wealth but also a legacy and live a fulfilled life, what would that be?
Yeah. Um, that's a great question. It might be too simple. For me, I think about legacy is most people are forgotten. Okay. That's just the truth of the situation, right? Like there's a very, very small percentage of the population that we remember. They either do tremendous things or terrible things. Okay. So I think where legacy happens is the people we impact. I think about if I can change somebody's direction just a little bit, right? And I think about where I can do that. It's my children, my wife, my employees, my clients. And they may not even recognize that impact. But if I can shift that, their thinking and their trajectory by just a small percentage over a long enough period of time, it makes a huge impact. And so I think about what we're trying to do with, we want to help our clients save $1 billion in income tax. That means it just gets redirected to wealth building, right? And if we do that for enough people, the impact they can have in their families, in their charitable endeavors, they might change a life and nobody would even know it was them, right? Because they invested in this, this charity that is out there just making an impact, right? And so I think the way to leave a legacy is impact the people closest to you. Just have a generous spirit, be a kind person, love your neighbor. The scriptures tell us love your neighbor, and everybody's our neighbor. Just be kind to people. I think that's a tremendous way to go. So even though we could talk about, yes, give $100 million to this hospital and have them put your name on it, but I don't know if that really is going to leave much of a legacy. I think it's more about the day-to-day, the people we impact. That's where legacy happens.
Oh, thank you for sharing. So in case anyone want to follow your work or work with you, where can they find you then?
Yeah, I think the best place to go is vitalstrategies.com. You can download a bunch of the free resources we have. We've got tools there that will help you save thousands of dollars of income tax. And then we also have our podcast as well that really just talks through in depth all of these concepts from cash flow, tax, investments, protection, and then what it looks like to live an optimized life. We're really getting into all of those pieces. So the podcast is a great way to be introduced to us as well. But really, there's some free resources at vitalstrategies.com that people can check out. And we think that's a great place to go.
I will make sure that all the links will be around here in the description below as well as in the show notes. So everyone, I hope this episode give you new ideas of you can pay less tax and maybe you can avoid that somehow. So you can start building wealth. And of course, check out Patrick's website in the description below. Thank you so much, Patrick, for joining the show today.
Yeah, thank you, Mutita. It's been wonderful.
Thank you. I hope this episode inspires you wherever you are in your entrepreneurial journey so that you can have your business that supports your lifestyle. Get a show note at getunstuckmethod.com/podcast. Review what we have learned together today and start implementing right now. See it by yourself. The result of your consistent action are worth it. You deserve the freedom to enjoy your life. Until the next episode, let's get unstuck.